I will be solving one of the cost accounting assignment for N6 under job costing. We will calculate and then we'll do the ledger accounts. Question 1 says, Louis manufactures products machines on order. On 30 June 2024, the firm had the following stock, meaning this is our opening balances: material 29,000, work in progress, which is production 53,485, finished goods 13,000. The work in process consisted of 2 unfinished jobs, job 111 and job 222, for which the following costs were incurred, and then we are given our cost. Up to 30 June 2024, manufacturing overheads were allocated according to direct labor cost. Because of fluctuations, management decided to use direct labor hours as basis. The budgeted direct labor hours in the next 12 months are 25,000, while budgeted manufacturing overheads are 75,000. Budgeted material cost is 120,000 and budgeted labor cost is 100,000. In July 2024, they started on job 333 and job 444. The following data were recorded during July 2024 and when we are given our information. During July, material purchased were 5,000 and the balance on 31st July was 13,000. Actual manufacturing overheads. This is the transactions that will be affecting manufacturing overheads. Job 111 and job 222 were completed and sold for 29,000 and 61,000 respectively. 1.1.1 says we should calculate the overheads allocate rate up to 30 June. We'll say total labor, which is 4,600 plus 10,350 and then you get 14,950. Overheads allocated. Remember they told us that manufacturing overheads were allocated according to direct labor cost, and then we are given our allocated overheads, meaning is 2,760 plus 6,210, and then we get the amount of 8,970. Remember what you want over what you have. We need to calculate the rate of manufacturing overheads. So we'll say we want what? We want manufacturing overheads, allocated manufacturing overheads. We want the rate, which is, we'll say 8,970, the total of allocated overheads. We divide it with what you have. What do you have for direct labor is 14,950 times, guys, 100 divide by 1, and then this is your percentage. You get your 60, which is 60%. That's for 1.1.1. 1.1.2 says the new rate. 1.1.2 says the new rate, meaning this is the old rate, and then we need to find the new rate. The new rate is for July. We calculated the old rate for 30 June. Now for July, they have added 2 more jobs. We will say budgeted overheads. Budgeted overheads, it is given. Here is it. While budgeted manufacturing overheads are 75,000, we'll say 75,000. 1, 2, 3. You divide it with budgeted budgeted hours, which is 25,000. Then you get a new rate, which is 3 rand. 1.1.3 says we should do the following ledger accounts. Now it's all about ledger accounts. We should prepare production control, manufacturing control, labor control. Okay, the time I was introducing job costing, I did tell you guys you should check if ever they request for you to prepare job cost statement first, because if ever they did, it makes our work easy if we start by preparing job cost statement. 1.1.5 says you should prepare job cost statement for both jobs that were complete. We need to prepare. Let's start by 1.1.5. This is the format. They say we should prepare for job 111 and job 222. And then we have our opening balances. Direct material is 9,500. 9,500 plus direct material in July 2000 plus 2000. That's the total of direct material. Direct labor. We are preparing for job 111 first, and then we will prepare for job 222. Or we can just do like direct material for job 222 is, we will say 20,065 rand plus 3,500. Then also you get your direct material for job 222. Let me just say job 1, 2, 3. Let me try and highlight it. Yes. This is for job 1, and then this is for job 2. Direct material. We don't have opening balance, which is balance for down. We have to calculate direct labor. We will take direct labor for job 111 is 4,600. 4,600 plus direct labor 2,500. 2,500. And then for 222, 10,350 plus direct labor 4,000. And then you get your total labor cost. Applied overheads is given, allocated overheads. Still, you open your brackets, guys, because there's calculations. You need to show your calculations. Open bracket 2,760 plus hours. It's 400 hours, but then we have already calculated your rate in 1.1.2, which is 3 rand. The 3 rand that we got here. The 3 rand that we got. So you say plus 400 equals to, you say 400 times the 3 rand that you got. This is the total. This is the total amount for applied overhead. So now you will say equals to 2,760 plus 1,200 for job 222. Still again you open your brackets. 620 times 3. 620 hours times 3 rand that we got the rate. We get 1,860. So you say, you say 1,860 plus 6,210. You get your total applied overheads, total production cost. We add all of this. This is sum. You will see that this thing is very useful. This is it. This is the total production cost. Total production cost is opening balance plus direct material plus direct labor plus applied overheads. But then in this case, we don't have balance brought down. We don't have our opening balances. Selling and administration cost. We don't have selling and administration cost. So we leave it just like that. Total cost again, get our total cost. It's the same. Profit. Now we need to calculate. Our finished goods were sold for 29,000 and also for 61,000, meaning job 111 sold their products at 29,000 and then 222 61,000. So now already that's a selling price. So we say 29,000, 1, 2, 3, and then here you will say 61,000, 1, 2, 3. So now we need to find the difference. 29,000 minus the total cost, you get your profit. You get your profit. This is our profit. This is how you get your profit. This is how you do your job cost statement for both jobs. We are done with our 18 marks. We can go back to 1.1.3. This is we should production control. Here's the production control, guys. Balance put down. It is given work in progress 53,485, 53,485, 53,485. Remember, we're in the month of July, not in June anymore. So we only deal with July. Don't make a mistake by also adding up June's work in July. No. Direct material, it is given. You add your 2,000, say equals to. You add your 2,000, meaning you open your bracket plus 2,000 plus 3,500 plus 8,200 plus 6,500. Then you get your total material, which is 20,200. Direct labor, you do the same. You open your brackets and then you add your direct labor, which is 2,500 plus 4,000 plus 12,000 plus 6,500. And then you get your direct labor cost, which is 25,000. And then you applied overheads, guys. You can to make your work easy now, you can just say equals to, and then you add all your total hours. 400 hours times 3 plus 320 times 3 plus 1960 times 3 and also plus 1,450 times 3. And then you get your amount of 13,290. 13,290. This is the total. And then now remember, we have two jobs that were complete. Now it's easy. You don't need to recalculate. You just come here, you take your total production cost, 22,560 plus 45,985. You add them together, guys. You already did that. So it's easy. $22,500 plus. This is your finished goods, guys. This finished goods is only for jobs that are completed. Meaning is 111 and 222, guys. And then the difference now. The bigger side is the debit side. So balance carried down. We need to find the difference. And then this is your balance brought down for the next financial year or for the next month. This is how you do your production control account in this case. Okay, they say now we should prepare material control. material control. Opening balance, balance brought down. Material 29,000. 29,000. 1, 2, 3. And then we were told that during July, material purchases were 5,000. 5,000. Now we really don't know if it was bought out cash or we bought it on credit. So it's easy to just say bank or creditors control. Creditors control. Bank or creditors control, guys. If ever we bought cash, he is bank, and then if ever we bought on credit, he is creditors control. For how much? For 5,000. And then on our credit side, remember, materially is an asset account. It increases on the debit side and it decreases on the credit side. So now on the credit side, we will record the material that we issued. It's either we issued it to production or to manufacturing, but we always issue material. So production, guys, we already calculated our direct material is 20,200. So now 20,200 goes to production. And then now the bigger side, they told us that the balance is 13,000. So they give us our closing balance according to the information that was given. Our closing balance is 13,800, not 13,000. So unless they forgot to give us indirect material, I would say. But then in this case, this is what we have. 13,800. This is how you deal with your material control account. And they say again, you should prepare labor control account, which is direct labor. You don't have opening balance for labor account. Is don't have any transactions that talks about labor. So our debit side won't have anything, but then on our credit side we have production. You open your brackets and then you add all your direct labor, but then we already calculated that already. Also direct labor from our production control account gave us 25,000. Which is that 25,000 we calculated from production. 25,000. And then we are done with our labor control account. Manufacturing overheads. They're telling us we should prepare manufacturing overheads. Okay. What you should know about your manufacturing overheads is that you always record your actual overheads on the debit side, and then you applied overheads, you always record them on your credit side. And then applied overheads, guys, is the overheads that you calculate. Actual overheads, they are always given. They are always given. Don't make a mistake of taking actual overheads and putting them in your production or whatsoever. They only work in manufacturing overheads. Applied overheads. Applied overheads, guys, we already calculated it. You take it from production. You need to be wise in this. Don't recalculate things that you already calculated. Applied overheads. This is our applied overheads that we calculated earlier on. And then actual overheads. We need to go and check actual overheads. Okay? Sometimes, guys, they write it as actual overheads, you just take it. But in this case, they tell us actual manufacturing overheads for July. Maintenance, you need to record maintenance here. You record maintenance just to save time. I want maintenance is 1,000 rand. Then you write underneath water plus 750, and then you write rent 3,000. You write electricity 5,000, no 500, sorry. Depreciation 3,400. Indirect wages, indirect labor, it goes to manufacturing overheads. Even though, let's say, in this case, they made it simple. If they were tricky and then they put it here, indirect, or on top there, they say here is indirect. You need to know that you don't include your indirect things in your production, but then everything that is indirect occurs in manufacturing overheads. So you plus your 4,000. But in this case, guys, you need to write it down nicely. Maintenance, water, rent, and so forth. And then you get to 12,650. Now in the bigger side, our bigger side is applied overhead. This is our bigger side, meaning cost of sales will be on the debit side. Will be on the debit side. Cost of sales. Cost of sales is the difference. But then our manufacturing account, whenever we close it, you don't close it as balance brought down or carried what. We close it as cost of sales. The difference is 640. Whenever your cost of sales is on the debit side, you should know that we over recovered, and then whenever it's on your credit side, it's under. Let's proceed. This is how you treat your manufacturing overhead. They need us to prepare finished goods. Finished goods. Let me quickly prepare the T account of finished goods. I'll just use for the labor. You've seen how to treat labor, so I'll just say finished. We need to prepare finished goods as fast and quick. So now remember, we have our opening balance. Opening balance, it is given, sorry. Balance brought down. $13,000. 1, 2, 3. Yes, finished goods, 13,000. And then we have calculated the finished goods for the 2 jobs that were completed. Just say production equals to finished goods. Enter. What's this now? Yeah. And then now, guys, we need to less cost of sales. We always less cost of sales. Cost of sales. For how much? We already calculated it. It gave us for 640. 640, 640. They are obvious. This is my bigger side. The difference is finished goods. Finished goods. You can just say finished goods. Finished goods. This is how you treat your finished goods account. And then they say you should prepare cost of sales. This is the last year account. Cost of sales. Okay, for cost of sales, finished goods, we have it in our finished goods account, and also we have it in our production. This is our finished goods. We had cost of sales in our manufacturing account. You always transfer it. If ever they ask you to prepare cost of sales, you need to transfer this. Sometimes they ask you to prepare a cost of sales account without you preparing manufacturing account. You should know that automatically, aside you take the actual overheads that will be given in your question paper, you minus your applied overheads that you already calculated, and then you have your cost of sales. Our cost of sales is over recovered, meaning on our debit side. Here's it. Since it's on the debit side, it goes to credit side. So say manufacturing. Say manufacturing for 640. 640. And then also cost of sales, whenever you close it, you don't close it as balance brought down, you close it as trading account. Trading account is the difference. Get 67,905 rand. This is how you treat your cost of sales. This is how you do your cost of sales. We're done with our 31 marks. We're done with our 1.1 4 marks. Also, we're done with our 3 marks. 1.1.4 says you should state that our cost of sales is under or over recovered. As I have explained to you, I believe I've answered that. Guys, it's over recovered. Cost of sales, if it's on the debit side, is over recovered, and then if cost of sales is at the credit side, it's under recovered. So in this case, is over recovered, meaning we're done also with our 1.1.4. 1.1.6 says we should prepare cost ledger for 2 jobs, 333 and 433. So also it's easy. Save time. For job 1, 2, 3 and 1, 2, 3, 4. Yeah. Just to save time, guys, I will fast and quick. Yeah. Cost ledger for the incomplete job. So let's go and check if we have the opening balance. No, we don't. Direct material. Guys, you have 2 cost ledgers. you need to open 2 cost ledgers. But then for me, since I'm saving time, direct material, you will take for job 333 direct material, you take your 8,200. Okay, let me just do this. Copy. Let me copy this. Where should I paste it? Let me paste it here. Yeah. Direct material for 333. Yeah. Direct material for 333. Direct material 8,200. 8,200. And then for 444, 6,500. Direct labor for 444, 6,500 again. So 6,500. And then for 333, 12,000. Applied overheads, you need to calculate it. Hours worked. Hours applied is 1,900 and we'll say 1,960 times that 3. You get your 1,960 times 3. 5,880. And then also for job 444, 1,450. 1,450 times 3 that you already calculated. You get your 4,350. You balance your account so that you can see. Balance your account. Let me just so balance carried down for job 333, 260,080 rand. And then balance carried down for 444, 17,350. Okay, let me just do the proper thing. Equals to, and then and also here you need to write it so your account can balance. This is it, guys. This is how you do your cost ledger for both jobs 1, 2. Done with our 8 marks. Question 2. Question 2 have 1.2. Study the incomplete cost of sales account of Winton manufacturers below and answer the questions. Okay, we are given the cost of sales that is incomplete. 1.2.1. Have overheads been over / or under applied in this business? State clearly if your answer is an over / or under applied. Okay, now they ask you to state if ever is over or under applied. Manufacturing. This is cost of sales from manufacturing. Hence, it's written manufacturing overheads. And then the moment we have cost of sales in our credit side, it means from manufacturing account, it was on the debit side. It was over applied. It was over applied, guys. Easy like that. 1.2.1 over applied. 1.2.2 calculate yeah, sorry. On to question 2 first and quick. Two point one over applied, and then just to state your reason, you can just say no, it's 1 mark. Over applied, that's enough. 1.2.2 calculate the applied overheads. Calculate the applied overheads if actual overheads amounted to 10,000. Okay. Remember now, as I told you earlier on, your manufacturing overheads, you always record your actual overheads on your debit side, and then your applied overheads, the ones that you calculated, on the credit side. Now they say calculate the applied overheads if the actual overheads amounted to 10,000. Now we need to calculate. So you have something like T account. So you just say 10,000. We had 10,000. This thing is like this, guys. Let me open a T account fast and quick so you can see. Sorry. Manufacturing. This is 1.2.2. Actual overheads is given 10,000. The scenario must be like this in your head. 10,000. Now they say we should calculate applied overheads. Sorry. Actual overheads is given is 100,000, and then they say you should figure out how much was your applied overheads. Applied overheads. The scenario must be like this. We need to calculate the applied overheads. But now, according to our cost of sales, manufacturing overheads, you know that is 25,000, right? And then it was on this side as cost of sales. You work with what you have in order for you to get what you want of sales. Given us 25,000. Right. It means our bigger side here, it was applied overheads of how much? You add this 2. You add the 2. It means plus 25,000. Our applied overheads, I best believe it was 125,000. This is it. You can show it by also doing the smaller table just to show them you understand what they are asking you to do. You open your T account and then you paste information that you have in order for you to get what you want. 1.2.3, assume that 20% of the goods produced were sold. Assume that 20% of the goods produced were sold. We assume now that finished goods, 120,000 of finished goods, 20% of them were sold. So 2.1.3, no. 1.2.3. You just say 120,000 times 20%. We want 20%. 24,000. 24,000 were goods that were sold. Calculate the amount of finished goods transferred from production. So you do this. Calculate the amount of finished goods transferred from production. It's a trick question. But this is it. We just say 120,000 times 20%. We get your assumption of goods that were sold, because assume that 20% of the goods produced were sold. Okay, we assume that. Calculate the amount of finished goods transferred from production. Just say 120, 1, 2, 3, minus the goods that were already sold, which is 24,000. And then you get your amount transferred from production. 1.2.4. Assume that the business uses a markup of 45% on cost. Calculate the selling price of the finished goods. You just take this 1,000. Just take 0.4. You take your 120,000 times 45%. Get 54,000. Assume that the business uses a markup of 45% on cost. Calculate the selling price of the finished goods. You get 54,000. 54,000 is the profit. Then now we need to add also our cost. 54,000 is a markup. It's our markup profit. You say 120,000 plus your markup. 174,000 is your selling price of the finished goods.